Everybody is telling you do not buy when the market is at an all-time high. I'm going to tell you guys the truth, okay? Market always hit new all-time high. Just look at the market for the past 30 years, 50 years, 100 years, okay? Market is always going to be hitting all-time high until they don't. Now, if you're waiting for that perfect dip that doesn't come your way, you're not really investing. You're just looking at the next person getting rich. And even if the perfect dip do come your way, you do not have the courage to buy. So, the market being at an all-time high doesn't really mean that the market is going to crash. No, not really. History tells us otherwise, but I don't think history is always right. It just means that optimism is high at the moment, greed is high at the moment, and liquidity is just flowing into the market. I think economic engine is humming really, really loud right now, where AI is the mass signaler. But of course, this is also the time where a lot of smart investors start hedging their positions, start hedging their excitement with good strategy so they do not get hit by a turbulent recession that comes blindsiding them from nowhere. Now, right now, equities might look really, really stretched out right now, and people think that it is a good time to diversify. You can think about it from either way. I'm not sure who you are and how old you are. And if you're able to wait for the market, honestly, even if you do not diversify, it is not criminal. But if you are of the age where you are about to retire, then I'm going to tell you very, very sincerely, please, please diversify intelligently. I'm going to be going through some asset class that you might or might not know, and you might invest or you might not. Just to bring this up for your attention, and maybe you might want to explore some of this. If you do not want to just stay in equities, you can get into treasury bonds and T-bills. Yields are finally worth playing right now. It's finally worth your time, okay? If you want to park some cash by the side while you're going all in on your stock, that works. You are expecting turbulence on the side, and you're having some cash on the side, getting some cheap yield. Now, the next asset class that I'm going to talk about is gold and precious metal ETF. And let's be honest, we've been looking at gold skyrocket for the past year. Of course, there is a little bit of a pullback on gold, dropping from $4,400 down to about $3,900 from its all-time high. But I think gold is still a classic hedge when inflation starts whispering in your ear about how it's so persistent. Now, we can also look at commodities. Now, when I say commodities, we're going to be talking about energy. We're going to be talking about agriculture, and maybe even lithium, cupric, copper, right? All these are all cyclicals, but they thrive when your supply shocks hit. It's going to be amazing because, especially when you look at geopolitical tension that happens, for example, just look at Russia Ukraine. When wheat got hit because of the geopolitical tension that happened in Ukraine, and Ukraine was a big exporter of wheat. Now, we can also look at real assets. This is going to be your REITs, it's going to be your infrastructure funds, and even your farmland ETFs. Okay, this is going to be benefiting your tangible demand and real world cash flows. So, of course, people who think that they want something that they can actually see, yeah, you can do REITs. They have good dividends and they have some good capital gains on some of them as well. And of course, last but not least, we cannot forget the crypto bros. The crypto and blockchain infrastructure is also something that you might want to park your assets in. But I don't want to talk about some meme project, some stupid NFT, something that's gonna rug pull you in 2 weeks. Okay, I'm not talking about any of those. Okay, I'm talking about projects that actually have proper AI plays or fintech application. Or you can just go into the classic old Bitcoin. Okay, it's not wrong to have a little bit of sub assets other than equities. Just want to be a little bit more diversified. So, of course, if you want to know more about ETFs where you can get such diversity, I'm going to be leaving a link down to my TikTok. Okay, because in my TikTok, I kind of uploaded it, I believe, about 6 months ago, where I was talking all about all these different ETFs. It's going to be a short video, link down in the description box down below. Okay, so if you want to learn more about all these different ETFs, these are all listed ETF. I actually explain how you can actually get them and how they help you hedge your portfolio. But of course, I have to be very, very honest with you. These are not sexy picks. Okay, these are not your AI picks. This is when the market wobble, they're going to be looking like first class luxury tickets out of the Titanic on those lifeboats. Now, we have to talk about the HO debate as well when it comes to investing. And I understand that a lot of people have the same concerns, especially when it comes to investing. It is if you should dollar cost average or should you go all in during a crash. Now, I have this rule, right? If you do not know when to buy, okay, if you have to come and ask me, or if you have to go and ask anyone else, when should I buy? The answer is you keep buying, aka DCA. You're just gonna dollar cost average, okay? It doesn't really matter. You're just gonna keep on buying, okay? However, if you are someone who knows when to be greedy when others panic, for example, during Liberation Day, during the day when Trump just went crazy on Truth Social, on days such as when COVID hits, all these different big downtrends, correction days, now that's where fortunes are really gonna be quietly made. And of course, consistency is going to be building you wealth. Okay, I'm not saying that $200 a month, $1,000 a month is not going to make you wealth. It is. It's going to build you wealth. But having true conviction in stocks is where you really get to multiply your wealth. Now, I understand that a lot of people think that, oh, maybe $100 a month is not going to make a big difference. Yes, it will. Okay, because you want to consistently be investing. But of course, if you're able to just put in $100,000 into a stock or an ETF that you have full conviction in and wait for 20 years in the future, I am telling you right now, that is going to be one of your best decisions ever. Of course, hopefully you're not being super duper convicted in things like blockbusters or something that's going to go bankrupt. But yes, the next market cycle is not going to be who have the best earning last quarter, who have amazing guidance. It's nothing of that nature, okay? We're going to be talking about who is building the best and most influential strategic leverage. Now, this is why I like to talk about NVIDIA. NVIDIA, just 6 years ago, was just a cheap designer. But today, NVIDIA is the biggest company in the whole world, with second place being $1 trillion away. We're not even talking about close match here, okay? So of course, we want to look for partnership in the big bros, the two big bros. It's going to be your OpenAI, it's going to be your NVIDIA. Any potential in AI infrastructure deals that's going to be boosting scalabilities, that's where the money is going to be made. Of course, if we have some collaborations for automation, green energy, whatever it is, we want to see some cost cutting meeting innovation. That's going to be good, right? And I think for people who are looking for new industry as well, something that you might want to look for, cross industry alliances. Okay, if that makes sense. That's going to be like your healthcare with some fintech. You want to have maybe a logistics with AI, like how the whole robots in Amazon, things of that nature, or clouds with robotics, things of that nature, right? I think that the next breakout company is not one that's going to be shouting at the top of the mountain, telling you I am the next biggest one. I think it's going to be a company like what NVIDIA did. Like I said, NVIDIA 6 years ago wasn't doing much. People just think it's a gaming company. People think that NVIDIA was a gaming company because all you did was design chips for people to play AAA title games on. But today, NVIDIA is effectively shaping the whole entire ecosphere of the economy. So, the next big breakout company, I'm telling you right now, they're just quietly building partnerships at the back that will slowly shift the entire ecosystem for the world economics. So yes, in conclusion, I do think, yes, market is high. Market is definitely high. But the opportunities for you to actually invest in this market is also relatively vast. If you know where to look, you can invest steadily, do a bit of hedging if you can. And when the world panics the next time, I hope that both you and I will be the calm one, just waiting in the calm of the storm with some cash and courage waiting to buy more. Because I guess in the long run, this is so overused, but I think this is so good, which is time in the market always beats time in the market. But courage at the bottom. That's where legends are gonna be born. But anyway, that's all I have for this video. Thank you guys so much for watching, and I hope to see you guys in the next one.